Rob Kniaz is the founding partner of H-Tree Capital, a London-based technology venture capital firm. Always good to have you on Global Business Europe. So why does the world's most valuable company need this kind of help?
Look, I think in this market, capital is everything. Raising capital to build these data centers, to build these hyperscalers is absolutely essential. And for NVIDIA, it's a way of raising capital in a non-dilutive way. So it doesn't dilute their value. It gives them additional pockets of capital. And they're really trying to reshape the narrative to get even more capital in beside the debt markets to get actual investable capital in from things like pensions.
Rob, critics call this circular financing, NVIDIA helping fund the very companies that buy its chips. Is that a sign of strength in the ecosystem or a warning sign?
I think it's a warning sign. It creates moral hazard. When you're marking up your own deals one after another and you're the beneficiary, it creates an artificial loop of what is the actual valuation. Without any external pricing, it sort of becomes magical money. So I think it is a worrisome thing when you see these things going in circles.
Now, this isn't just Wall Street's own money. I mean, we're talking about these six big banks and investors. It's pensions, it's insurance funds too. If this bet doesn't pay off, who actually carries the risk?
Well, I think it's getting shifted around, and what he's trying to do is shift the definition of risk from things like debt that are inherently more risky to now shifting it more to an asset class, so things like pensions, which normally are quite conservative, get access to things that are actually more risky. So it's a way of mixing the labels a bit and trying to double dip in a way and get high quality debt at a high quality asset rate.
Now, CoreWeave, Supermicro, they report after the bell tonight. Both sit right in the middle of this infrastructure spending story. What would a miss from either of those tell us that NVIDIA's $500 billion number can't?
I think the question, at what point does the demand start to slow down? Do we reach a point with the frontier models where the demand isn't quite so high? Right now, there's almost insatiable demand. At some point, we probably do hit a plateau where the demand starts to decline or at least flatten out. I think companies like Supermicro have already pre-briefed that the numbers are going to be good this quarter and up. But there's certainly early indicators we're looking out for to see how these things actually going to flatten out.
Is it going to be a litmus test of whether this big push in terms of AI infrastructure spending is the right move? Because it's going to be a long time before we see these companies making the revenue, right?
Yeah, I think, again, it's an arms race you're seeing right now. Companies like Google raised $10 billion from Berkshire Hathaway and others. You're seeing this big, defensible moat trying to be built that we think will be a generational level defensibility asset. So in this case, I think this is one of many things we'll see going on to build these intense amounts of compute power with a concept that those with the most compute power will win eventually.
Rob Kniaz from H-Tree Capital, thank you very much.